I got to be honest right now. I'm so pumped. There is so much going on, and the stuff I'm going to talk to you about is not very good news. But it's good news for you if you know why it's happening, how it's happening, and when all this is going to take place. So here we go. Let me jump in my truck. Sorry for the mess, everyone. I have been remodeling a house. I've been covered in dust for like the last 2 weeks, and I saw these news stories and the way that they're compiling up. Let's just put it this way. Do you remember when Donald Trump told the Federal Reserve or just made a statement that he was no longer going to pressure the Federal Reserve to lower rates? Type one if you remember that, because this is very, very important. Because he said that probably, I don't know, a month ago. I want to say he went out and he said, look, I'm not going to pressure them anymore. He had a plan to take rates down different way. We talked about that, how all of a sudden there'd be this panic into a recession. And there's a lot of information that shows we're not only in a recession right now, we've already been in one because the books have been cooked. The problem is the general public doesn't get it yet. And that's what Donald Trump sort of wants. Well, now Donald Trump's going back on that. So we're going to talk about all these different stories. We're going to give you the first story about just a sign, a symptom that proves that we're in a recession. This is out of Axios. Americans are behind on car payments at a record level. It says auto loans are now the auto loan 60 plus day delinquency index. Here's a chart. Yep, my fancy chart, right? Look at where we are right now. This chart goes back to the year, holy cow, 1995. Oh my gosh. I mean, think about this. Subprime auto loans. You know, we had a massive spike going into the dot-com bust, right? Then we obviously saw what happened around 2008. This is the 2008 number. This is right now how many people are behind in auto payments. So let me go over that. And real quick, I'm going to do this stupidest offer I've ever done. I haven't sold this in a long time. The Auto Trader Pro. I teach you how to buy and sell cars, new and used, to save thousands and thousands of dollars when you buy the car and make extra cash, especially at thousands of dollars more when you sell the car. Links down below. It's $99. It is called the Stupid Crazy Sale. All right, here we go. Americans are missing their car payments at the highest rate in decades, according to Fitch Ratings data. Why does this matter? Well, car costs, including loans, insurance, have soared in the economy, blah, blah, blah. But by the numbers, 6.6% of subprime auto borrowers were at least 60 days past due on their loans as of January of 2025. This is the highest level since the agency began collecting the data. The fall and winter of 2024 saw the next highest subprime delinquency rates. Prime borrowers' scores are faring much better than subprime. Well, it's because they're prime, right? So again, let me just show you. That is a sign of what's going on in the economy, okay? The highest level ever since 1995. All right, eclipsing the dot-com bust and the real estate bust of '08, and even what happened going into COVID. Okay, so that's a sign. So the economy's not well. All right, now let's go to CNBC right now because this is heating up awesomely. Sorry, I'm so excited, but when you see this stuff happening, it gives you a lot of validation. Let's just put it this way. Type me, you know, like Ricky Bobby had the cougar and me on the hood of his car. Type me if you have felt like the economy's going to crap and everyone else is crazy that's saying it's not, it's good. While the stock market numbers have been going up, people are like, no, the economy's great. You're like, no, that's inflation. The stock market's going up because of inflation. The economy is actually in the crapper, and they don't understand what inflation does when people are racing. So see, everybody, it's me. It's just me out there. All right. So all of us sort of agree that we all agree the economy's in the crapper. And that's why we've been saving money. We've been getting out of debt. We've been investing in inflation hedges and absolutely crushing it. If you own gold, silver, or some crypto, I get it. It's down right now. It's not down. It's in a little dip. It's asleep. I think it's going to dip a little more. I hope it does. I really hope it does. All right. Now, this is where it gets interesting with President Trump. All right. This is the big headline today. Look, here's his mug right there. Mr. President is sitting there, and Trump now says the Fed should cut rates to ease the economy's transition to his tariffs. Now, this comes yesterday after Jerome Powell made statements like, hey, we're not cutting rates because we have to get ready for the fallout from the tariffs. The inflation. Now, think about this. When you create a tariff, right? eventually it does come down to the consumer. It does, right? If we're buying crap from China we're going into Walmart buying crap from China that's just, or going into Harbor Freight and just smelling that off-gassing plastic type 2, if you know what I mean. You just walk into Harbor Freight and you're like, oh, it smells like savings and I'm choking on it. But my point being is, when the tariffs rise, they go up, you're going to pay higher prices at Harbor Freight, right? And for those off-gassing plastic tools. All right, cool. So here's the thing. The Fed's going, well, if we lower rates, people are just going to borrow more money, and that's going to be bad because it's going to add more inflation, which is true. That is exactly what's going to happen. And that, coupled with tariffs, is bad. So why not keep it mellow? Well, Trump said a month ago, like I said at the beginning of this video, hey, I'm not going to pressure the Fed to raise rates or lower rates. Sorry, I screwed that one up. This is what happens when you go live. I have no editing. I'm not going to pressure the Fed to lower rates. Has it been a couple weeks yet? Okay. All right, Fed, you need to lower rates. So that's what's going on. So he's saying right now the Fed should cut rates for the transition to tariffs. Now, I don't think this is a bad idea, right? Here's the problem. This is when you know things are getting a little nutty. You click on bonds. As of right now, today, this morning when I woke up, the 10-year US 10-year bond was down 0.07. Now, that may not seem like a lot, but it actually is recently. We haven't seen that kind of daily drop in a while. This chart, let's see here. The point being is that he needs bonds to come down a lot. And the thing is, let me go back to bonds, sorry. The thing with these bonds is, if people don't believe there's fear, like if they're not afraid that there's a recession, they're not going to race out of stocks and into bonds. Now, the stock market is going down, and it says right here that Treasury yields dip, right, as investors weigh the state of the U.S. economy. It says U.S. Treasury yields dipped on Thursday as investors are now weighing the state of the U.S. economy a day after the Federal Reserve held interest rates steady. The benchmark 10-year note yield slipped more than 6 basis points to 4.189, and the 2-year Treasury yield fell more than 4 basis points lower at 3.9. Still really close, depending on how long you want to keep your money tied up. My point being is this: the more people get afraid of what's going on in the economy, and remember, the Fed always, all throughout history, about 90% of the time, they end up starting to lower rates approximately 1 to 2 quarters prior to a recession being announced. Why? Because they have all the data in front of them. They know that things are bad, right? So like all of us that typed me earlier, hey, things are bad. The Fed knows it too. And they've already started lowering rates, right? But they're trying to hold off. There's always this time. If you look at the Fed dot plot plans and the Fed rate changes, you'll see that they start to lower rates going into a recession. They know everything's going bad because they see the data. They lower them a couple, 2, 3 times, then they pause and they wait. And they just steadily wait, right? Because they don't want to lower them too fast, because what will happen is a bunch of people will run in and borrow up a bunch of money and run things through the roof again. This is what I'm concerned with in real estate. Now think about this. This is Trump's last term. This is really important to consider when it comes to real estate. We already have real estate at nosebleed levels. Now they're all coming off their highs around the country. I don't care where you live, prices are falling. And if they're not, because you live in a town with 3 homes and there's one dude trying to sell his house and been on the market for 4 years, it doesn't mean that prices are steady. It means it's the real estate market's crashing because no one came to buy his house. All right. I don't know what to tell you. This is how it works. So if all of a sudden, because the price of homes have been so high for 3, 4 years, 5 years, which ran up the price of insurance and property taxes and things like that, if all of a sudden rates lower without enough people losing their credit scores. Now, please get this. In a good, healthy pullback of an economy, a recession, enough people lose their credit scores, and these are the people that borrowed irresponsibly. They borrowed money that they couldn't repay back. They didn't care. All they cared about was impressing some neighbor or a friend of theirs. It was a fancy car, fancy house. In a healthy recession, enough of them are losing their credit scores, and so that they can't come back in and do exactly what they did before. In this scenario, it may be happening so fast, this sort of bullwhip or snapback effect where, you have prices rising, then prices start to come down, and they're not coming down because people are losing their credit scores, they can't buy. It's because a majority of the population has educated themselves and has pulled back their spending, right? Man, type 3 if you're getting this, if you understand this. Because then what happens is those people that have pulled back and that caused a recession, rather than people losing their jobs, people losing their credit scores and that causing the recession, what happens is rates lower, and all those people that pulled back all of a sudden dive back into the economy. They borrow a ton of money, and it's going to take houses and cars and skyrocket them, bringing me to my original thesis 2 years ago that we're going to have higher inflation. And this is very, very important for people to understand. Now, are there deals to be made? Heck yeah. I bought a Porsche a couple years ago, a 911, and I paid, oh gosh, what did I pay for that thing? Let's put it this way, without getting into it. I still, 2 years later, that car is worth $30,000 more than I paid for it, right? Because I knew the right time and the way to buy the car. I bought that one used, but from a dealer that couldn't sell any of his vehicles. So he ended up having to sell his personal car to fund his dealership. And that's happening now. That's why I'm going to put the stupid sale link down below to Auto Trader Pro. It's literally called the Crazy Stupid Deal. I've never sold it for this much. So you'll make it back in like a nanosecond of one deal. So I've been buying and selling vehicles and trailers and stuff for 20 years. Let's see, I'm up to about 170 of them, 180 of them now. All right. Okay. So we get now that that Trump is now pressuring the Fed. He's putting pressure on the Fed, right? And this is important to know because just 2 weeks, a month earlier, he's saying, I'm not going to do that. Well, rates aren't going down fast enough. And this data, like I came out with the auto payments behind, credit card delinquencies are skyrocketing right now. It's not coming fast enough because he needs a win. He wants more and more wins for the people. And I'm all for that. The problem is the timing of this win might be too soon. We may not have enough irresponsible borrowers that have lost their credit scores to be able to fully have a clean pullback. Investors, bond investors, stock investors, they all talk about crypto investors. Hey, we need a healthy pullback. It's been too sharp, too high. And we're afraid if we don't get a healthy pullback, we're going to get a crash. And that's not good, right? To the year 2000, the year 2008, everyone remembers the Dow Jones lost 50% of its value. Well, if you look at both of those times, the Dow Jones went up to, in 2000, it went up to, let's say, 11,000 and change, and it came down to 6. Then in 2008, it went up to let's say 14, and it went down to 6 or 6,500. I'm giving you round numbers. My point being is those were pretty healthy, pretty sharp, but pretty healthy pullbacks, right? They're a multi-year pullback. Well, now you look at the stock market. Where's the Dow Jones? What's the amount of the Dow Jones right now? This is 42,000. We have not had a healthy pullback because 2015, we were supposed to have a really healthy recession. It was a Shemitah year around that time. We were supposed to have a healthy recession. We didn't. We covered it over with money printing. All right. I really want people to understand what's going on here. The Democrats under Obama in 2014, 2015, we should have had a healthy pullback going into 2016. We didn't because they wanted to get their next lady in. Remember Hillary Clinton? You remember? Hey, remember? Guys, type 5, if this is making sense. They pushed off that recession, and then they pushed it off again with COVID. I don't know how to explain this better. If you are in debt right now, you need to be working on getting out of debt. If you are worried about your crypto holdings, don't. Even if they dip more, which I'm really hoping they do because I want to buy up everything I can. In the short term, yeah, it's going to dip. You didn't lose anything by selling or not selling. You try and buy more. Gold and silver, it's only going to do well in these times. But these are the days to get ready. Look, if you guys want to buy a car, links down below. I'm not joking. You'll make that cost of the course. It's $99, 10 times over in the next car deal that you make. And then you're going to do it every day, every time you buy a vehicle or a trailer or an RV for the rest of your life. And this is these are all my tips and tricks on how to buy and sell cars and trailers and RVs and all that kind of stuff. All right. I hope you got something out of this. I'm super excited for the near future. Trump is now putting the pressure on the feds, and hey, you can see why. Things aren't good. All right. But they're good for you and me because we know it's coming. We know we're here. We're doing things about it and we're going to absolutely crush it. We're not like going to run into a cave and hide like a bunch of tools. Hey, do you guys know something really quick? Because there's a lot of people freaking out right now over Tesla. Like, oh my gosh, burn down Teslas. But if you think about it this way, there are people just losing their minds because their money is being taken. You know, your and my tax money. Things are looking up, but remember, it's always darkest before the dawn. It's true. I mean, how many of you have been up, you know, at 3, 4 in the morning, and it's just, dude, it gets dark. Dark. Why? Because that moon is leaving our skyline and the sun is about to come up, but it's getting darker and darker. You remember this happens in the economy as well. It's going to get dark. It's going to get hard. But for those of us that are prepared, we're going to be able to change the world all around the world. This is exciting times. All right. With that being said, thank you so much for watching. The Economic Ninja is out.